Hi, I'm Louise. Telekom, one of Malaysia's largest telco counters, is it worthy to be invested? Profit and dividend distribution. Between financial year 2012 to 2021, Telekom's revenue was on an upward trend. On the other hand, its profit before tax and profit after tax were not increasing significantly. In this figure, the trend of the earnings is more clearly seen. Between financial year 2012 to 2021, Telekom's earning per share was shown to be fluctuating. During this period, dividend distribution was consistent. However, in the last few years, the amount of dividend distributed was lesser than before. Between financial year 2012 to 2021, Telekom's dividend yield was on a decreasing trend. In financial year 2021, Telekom's dividend yield was 2.4%, which was slightly higher than FD rates. In the last few years, Telekom's dividend payout ratio was almost constant at around 60%. Management efficiency. Between financial year 2012 to 2021, Telekom's net profit margin was also fluctuating. Also shown in the figure, between financial year 2012 to 2021, both of Telekom's return on assets and return on equity were also fluctuating. Stock valuation. Between financial year 2012 to 2021, net tangible assets per share of Telekom was almost constant at around RM2 ringgit. On the other hand, during this time period, Telekom's share price was fluctuating. It appears that Telekom's share price is not directly linked to the assets value of the company. By comparing its share price and earnings trend, it is shown that there are some correlation between its earnings and share price. This shows that the share price is influenced by the company's earnings to some extent. Price to book ratio is calculated by dividing share price with net tangible assets per share. Lower price to book ratio, especially lower than 1, is preferable. This shows that the share price is undervalued and has room for upward movement and worthy to be invested. Recently, Telekom's price to book ratio is mostly at around 3 times, which shows that the share price is still at a relatively high point. PE ratio is calculated by dividing share price with earning per share, which shows the ratio between the share price and the earnings of the company. If the ratio is very high, it shows that the share price is at the high points, which is not worthy to be invested. Between financial year 2012 to 2021, the PE ratio of Telekom ranged between 20 to 40 times. In 2018, due to significantly lower earnings, the PE ratio rose to over 60 times. In 2021, Telekom's PE ratio was at around 23 times, indicating that the share price is still relatively high. The market cap is calculated by multiplying share price with the number of shares. Hence, higher share price will contribute to increasing market cap and overall valuation of the company. In the last few years, Telekom's market cap was similar to the share price trend, which was fluctuating. By considering the number of shareholders holding the stock, it is shown that between 2012 to 2017, the number of Telekom's shareholders was decreasing. On the other hand, between 2018 to 2021, the number of shareholders were increasing. Telekom is also well supported by institutional investors. Its largest shareholder is Khazanah Nasional Berhad, holding 20.11% of total shares, followed by EPF, Amanah Saham Bumi Putra, Kumpulan Wang Persaraan, and so on, also holding significant quantities of shares. Due to its large market cap and stability, Telekom also attracted significant interest from foreign investors. In 2021, foreign investors were holding as much as 9.72% of Telekom's total shares. Financial management and stability. Between financial year 2012 to 2021, it is shown that Telekom's capital expenditure spending was between RM 1,500 to 3,500 million ringgit per year, indicating that the company has been investing significantly in property, plants, and equipment in order to expand its capacity and reach more customers. Between financial year 2012 to 2021, it is shown that both of Telekom's equity and liability were almost constant. In the last few years, its equity to liability ratio was below 1, indicating that its debt is relatively high. Between financial year 2012 to 2021, it is shown that both of Telecom's current asset and current liability were almost constant. In the last few years, its current ratio was above 1, indicating that the company's short-term debt level was low. Hence, it was having enough funds to repay short-term debts and its finances has been stable. Between financial year 2012 to 2021, Telecom's cash flow was between Rm 1.5 to 5 billion ringgit, a very high amount, indicating that the company's finance is on a stable footing. By considering its cash flow per share, it is shown that in financial year 2021, Telecom's cash flow per share was Rm 50 cents, which is around 10% of the current share price. In conclusion, in the last few years, the market competition between telecommunication services providers has been intense, which led to the fluctuating profits of Telecom. In addition, its dividend yield has also been decreasing in the last few years, down to around 2 to 3%. However, Telecom's market cap is large and its finances is stable. Now its PE ratio is about 20 times. Do you think it is worthy to be invested in? Also worth mentioning is that Telecom's main business activity is providing broadband internet connection and landline phone connection, currently serving 3.4 million customers nationwide. This business segment contributes up to 43.9% of Telecom's total revenue. Telecom's second business activity is providing cloud computing services to corporate customers and government agencies. This segment contributes 30.6% of its total revenue. And Telecom's third business activity is providing wholesale telecommunication services to Malaysian and international telcos through its optic fiber network spanning over 900,000 kilometers. This segment contributes 21.9% of its total revenue. That's all for today. Feel free to share your thoughts in the comment section. See you next time. Bye. The content above is for sharing and reference purpose only. It is not an investment recommendation. Investors are encouraged to carry out further research and analysis as well as follow up latest update information before making any investment decisions.